This is a Stock Trading Reality Podcast, episode 53.
You don't need to risk a lot of capital to make a little bit of money. You really don't. That to me gets to the gambling part. You're getting a little closer. That pendulum is swinging towards the gambling when you start risking that much more capital.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, whose handwriting is worse than a second grader. This is pathetic. You want me to read this? Worse than a second grader's. Oh, I get it. ClayTrader.
You know, I got to first just start off by saying I absolutely love our little announcer guy. Just the way he mocks me and just takes the little fun facts and kind of puts his own twist on them. But the first time I heard it, I was literally laughing out loud. And the other one that I really like, and I haven't commented on it, was the fun fact about me not liking horror movies and how he brought that up and just totally mocked me for it with his own little twist. So I just want to say I love our announcer guy. He does a fantastic job. But yes, I don't have the prettiest handwriting, and some would say that it's the equivalent of a child. But you know, it is what it is. I still don't hold my pencils and pens right. I remember in school they'd always be like, "No, that finger is supposed to technically go there." And I think I know how you're supposed to do it, but I just refuse to do it these days out of stubbornness, I think. So that probably attributes a little bit to it. And I know guys are supposed to have like guy handwriting, but mine's more like just a child's handwriting. It's not a pretty thing. But good thing email exists, and I love my keyboard. I'll just leave it at that. Ches, how is your handwriting?
Kelly told me I should be a doctor. My handwriting is so awful, and it's similar to you in the sense that most of the time it's only legible to me. But my version of writing is printing, where I just don't pick up the pencil or pen, so it becomes cursive printing, and it's just absolutely awful and garbage.
Yeah.
But yeah, without a computer and typing, I'd be screwed.
Yeah, cursive. Yeah, that's how mine turns out. Is cursive printing like become one, and then that just turns into garbage. So, but we'll move on to what people actually care about. But before I go into even that, it's been a while since I've kind of just given the brief history that I like to do every, 5 or 6 podcasts, and that is, hey, why are you only interviewing people from the chat room? What is this, some sort of massive sales pitch? And no, it's nothing like that at all. But to be brutally honest, if you are a listener that are not part of the group, it was never really intended for you. My original plan was that, you know what, let's just have something where we can inspire one another within the community, hear each other's stories. And then it kind of turned into, you know what, why not just open it up? And if other people outside of the community can get inspired or whatever, then that's cool too. So that is why, because I still get, periodic questions of, oh, you only interview people in your group. Well, yeah, because that's what it was originally intended for. So if you are new or just have been wondering that, that's kind of the history of it. It was always just intended to be for the community itself to help, to motivate each other, inspire each other, and just to kind of keep it, something that we could just have, for ourselves. But hey, why not share it with everybody? Why not just make it public? But that is why, like I said, we're only sticking to members. And on that note, our member today is Joe. He goes by JBH in the chat room. And Ches and I were talking as soon as it was done. This is a good one. And I'm not trying to set the bar high, but I think if you're brand new, you probably won't realize how good it actually is because you haven't experienced and kind of gone through some of the things he's talking about. But if you are not new and have some experience, you're totally going to be able to relate to some things and say, wow, that was a really good analogy, or, he really nailed it. But again, going back to you that are brand new, have maybe never traded before, please, please, please listen to what he's talking about because it is true. And he does a very good job of explaining it. So let's just get this party started with Joe. Well, hey, Joe, thank you for taking some time out of your day and welcome to the show.
Hey, thanks for the invite.
Well, we kind of know how you've been doing because we've been chatting for about 5 or so minutes beforehand. So, but how are you doing anyways? Just so the listeners know how you're doing.
I've been doing pretty well. A little bit slow trading. I had a little situation with my mother's health, but everything's good now.
Excellent, excellent. And a little fun fact about Joe that we just learned is that, first off, him and Ches were rubbing it in my face about how warm it is here in Michigan today. It's like 30, and Ches said it's 88 out in Southern California, and Joe's down in Houston, and it's 77 down there. So, and like I was telling them, there's really no rebuttal. There's nothing like good, quick wit I can come back and like say to them, just because, I mean, what am I going to say? Like, oh, well, I get to go sledding today. It's just, there's nothing I can do. So, but we've gone across that, that salt has been rubbed in the wounds. But Joe, it's fantastic to have you. So we'll just start right at the beginning here. What got you involved in the markets? What got you interested? And then after that, we'll kind of see where the wind takes us.
Well, a couple years ago, I sold my business, and I did quite a bit of traveling. I rented a car and took a 30-day road trip across America, basically. Hit all the national parks, basically Yellowstone, Yosemite, what have you. And then when I came back, I didn't know what to do. I was like, okay, what's next? And I didn't want to start another company. So I started getting into the stock market. I'm the youngest of eight. And
Eight?
Of eight.
Eight. What's the breakdown there? How many brothers? How many sisters?
5 brothers, 2 sisters.
Wow, that's a lot of people, Chaz.
Yeah, being an only child, that is a lot of people. That's like half of my cousins right there.
And not to cut this off or detract, but I just noticed you and Joe have a pretty big bond there, Chaz, because you did the whole thing with your motorcycle, and then
I did.
Just,
I did
so
a.
I did not know that about Joe.
Yep, I did a 64-day trip around the country. So me and Joe, we know all about how it feels to kind of come back and then go, now what?
Yeah, it's very difficult to get to certain parts of the country unless you're doing a driving vacation. So it was great. It was the best trip I've ever done.
This is totally off topic, but you piqued my interest. What out of all those places you went, what was your favorite one?
Yellowstone, I think. The animals just camping out. And in all of their Jackson, Wyoming area, Yellowstone, then you had Tetons, and then you had Glacier National Park, all in a row. And it was nature at its best.
Awesome.
All right, so I did Yellowstone, but I did it on a motorcycle, and I'm not gonna lie, it was a little bit nerve-wracking because all the cars stop when the animals are there, and buffalo or whatever, huge animals, and then I'm there on a motorcycle going, can we please get moving? Because it wouldn't take much for one of these guys to just kind of ram into me right now. But
right.
Yeah, it was definitely interesting. It's super beautiful out there.
You know what some people don't get is that even when you get into the national park, say you get into Yellowstone, it takes you about 3 hours just to get to your hotel. And people don't understand. It's like going from Houston to San Antonio. You enter through Houston, and then when you get to your hotel in San Antonio, it's that big.
Yeah, I wish I could say I had experience and could relate, but all I can say is I think that says enough about Yellowstone right there. Of all the places you went, if that's the top place, it sounds like that's a place I'll have to get to before I kick the bucket. But
when your kids get older, it's a necessity.
Nice. That sounds good. I know my dad went there, but people are, if they're just like maybe skip through things and just landed at a random spot, they may think this is like the National Geographic Channel podcast right now where we're talking parks. But yeah, right. So anyways, you get back and then you're kind of like, what do I want to do now? And then you kind of look into the stock market. So let's pick it back up from right there.
So all my brothers are in the oil and gas business. And, they were like, you want to do something in that? I'm like, no, I don't trust your market right now. And this was a year and a half ago, what have you. Oil was peaking up $100, $110 a barrel. And even one of my brothers says, you're smart. We think it's going to go down big time. And sure enough, it did. My oldest brother, really smart guy, actually retired from Williams Corporation. He's like, if you like the stock market, you need to start learning. And I didn't do a lot of investing. I invested in myself. I started a company when I was 30. I sold it when I was 43. Like I said, I didn't know what to do. And he was like, let's get into the market. And I'm like, okay. So I started researching, and then I came across you. Just hashtag trader, trading, blah, blah, blah. And I pull up ClayTrader, and that's when I started getting into your courses.
So just so I can understand, you literally were on Twitter and you're like, you know what, let me do a search for hashtags. So you just hashtag.
I was Googling, I was hashtagging, I was doing everything. I'm kind of a nut when it comes to research.
Okay. And so you came across just one of my tweets or something like that, and it led you to the site. So at this point, you had made 0 trades. Is that right?
No, I haven't made any trades yet. Now, I was an investor. Don't get me wrong. I mean, I had some Apple stock, back in the day.
Right.
But I was an investor, not a trader.
Okay. So, because I'm almost shocked here because I think you have now entered into Elite Club. And Chaz, correct me if I'm wrong, but most people, let me So you found the site, and then did you right away like buy a course, or
No, I started following your YouTube videos and I
okay?
was
So
seeing how you were doing it and I was looking for common sense on it, if that makes sense.
You wanted to see if you were going to say, well, I think I should go long this falling knife because this is sound money management. So, yeah, he was just feeling out the waters there to see what kind of guy you were.
Yeah, I wanted to
so
see if I liked it.
so let me. I'll just hit you between the eyes. Did you buy a course before you ever made an actual trade?
Before I started doing trading, yes.
Okay, so right there, you are now in an elite
You
club,
you
not
are in
just with
the elite echelons of people we've interviewed now.
yeah. I can tell you're a businessman because it's well, good job. And we're saying this if maybe you're a first time listener because most people, and if you're not a first time listener, then you know exactly what Chaz and I are talking about. It doesn't go this way. It's oh look, there's a bunch of free YouTube videos out there. Oh look, there's a bunch of just free websites. I can teach myself how to do this, and then they go out get slaughtered, and then they go back and they're when we ask them the time machine question, it's always that one bit of advice would be I wish I would have just got educated up front. And here Joe is actually getting educated up front. So what was going on in your mind that made you think that, I want to actually invest in my education before I put any real money at the line? Because you are not normal. This is not a normal situation. So, I
I
mean,
don't like
maybe it was common sense to you, but it's really not common to most people, myself included. So what exactly was going on up in that brain of yours?
Well, I don't like to invest real money in something I'm not comfortable doing. And I wasn't comfortable in trading because I didn't know what the hell I was doing. So, you have to do some research. I like the research part of it. And there really wasn't any place where you could learn. I didn't know candlesticks. I saw line bars. I didn't know there was a psychology behind the damn thing. I knew there had to be something more to it. I just didn't understand it. But the really, there's some other people pumping their rooms and there's pumping their trades and oh buy this, it's gonna go up, blah blah blah. But I didn't understand why it was gonna go up. And so therefore I needed to do some more research. And that's when I bought robotics. That was the first step, And then I took a break from the room and literally because everybody was putting out alerts, I was like, I don't understand that alert. What the hell does that mean? And so I would go through robotics and I would shut down everything and just teach myself robotics. And then I did paper trading. And then I literally, I don't think I traded for almost 3 to 6 months.
You are in the top 1% of people we've ever interviewed because you actually seem to take the right process without having to completely, pay the market a big tuition and then kind of come to your senses. But I think like Clay said, being a businessman at heart, you don't just dive into things, uneducated on it or, unintelligent about it. So that's actually super good. You practiced. He bought something before. I'm tearing up over it, Clay. How are you doing? Yeah, I mean, you're probably weeping.
I could use a hug right now. I mean, this is very motivational. This is
Well, I've started a couple of businesses that have failed. And so I've learned through that. I mean, and not doing enough research on my own businesses that I was actually investing in. And it sucks losing money. And I just don't like losing money. Robotics says it's not an emotional thing. No offense, BS. It is. Because if you're a loser or sore loser like I am, that's an emotion. I'm a sore loser. I don't like losing $10. So that's just me. So it's hard to take the emotions away out of it, but I'm the youngest of 8. I've been my butt kicked a lot, and it's a competitive family. And so losing is just a bad taste in my mouth.
Joe, I got to say, I love the passion here. Calling BS. And it is, I get what you're saying. I mean, especially if you go in with totally no plan at all, even when you have plans, there's still emotions that come with it. And the whole goal is to eliminate the emotions as much as possible. But yeah, you're absolutely right. And I think that's why so many people stumble with chat rooms or courses or anything, including my own, is, oh, I've paid money for something. And because I've paid money or because I now have some sort of strategy or I'm following somebody's system or this, that, or other, because I'm getting somebody's buy signals, that like there's not going to be any emotion with it. When it's real money, there's always going to be emotion, especially when you admit to yourself, and I think a lot of us can fall into that camp, you're a sore loser. Yeah, there's going to be emotions with it no matter what. That's well said. I mean, but where does this, I mean, you grew up in a family of 8, so you're getting, I mean, it sounds like you're more of a sore loser than others. I mean, are there any other ways, or is that just kind of you by human nature?
That's me by human nature. I'm a sore loser.
And so I'm assuming well, I know you're super competitive just because you got to be super competitive if you want to, start businesses, fail businesses, and then after you fail, go back and do it again. So,
Or eat at the table when you're a kid.
yeah, exactly. If you want to get that last piece of food, or I guess really any food at all, yeah. So we'll have to go down this rabbit hole some more as we progress. So, and I want to establish some context because a little more context for you as listeners. Joe has been on every live webinar as far back as I can remember. I mean, ever since the live webinars that I do as part of the university, he's like always there. So I'm trying to think, where was, ClayTrader University within the whole kind of thicket of things? How did that fit into, this opening part of the journey when you were just trying to, learn and get get a good foundation?
Well, I started off with robotics, and then I went to the RVR, and then I started adding on. And that's when you mentioned that, hey, you're buying certain products. If you want to work out a deal with Nate, we can work out a deal. In the beginning, I said, yeah, I mean, I might as well just buy the whole damn thing. It's an investment. And so that's how I started in the CTU. And I've recommended some friends. You've had a few of my friends come on there, get on the chat line, but I'm not sure if they're so serious about trading for a business. Oh, that's just gambling, blah, blah, blah. I said, no, it's not really gambling if you know what you're doing.
Let me ask you this. That's awesome. I like how you said that. What do you mean by serious? What do you mean you have to be serious in order for this whole thing? Explain that a little bit more.
Well, I mean, there's work involved, and people.
There we go.
I mean, you do have to do work. I mean, I was watching your YouTube videos, and every day you were going through, and it didn't matter what stock it was, showing up your supports, your resistances, your trend lines, what have you. I do that every day after 3 o'clock. I go through probably 20 charts every day, putting up supports and resistances. I'm a creature of habit, and I'm putting in my trend lines. You go do your videos after the market closes. You say, hey, guys, I'm going to leave the chat room. I got to go do my videos. I do the exact same thing. I go through every single chart just to find out what's going on.
And that's so, but wait a minute, Joe. I thought I seen some stuff out there where you sign up and they send you text alerts and like buy and sell signals, or they'll send you like an email and it'll tell you when to buy and sell. And there's like no work involved. So, I mean, are you telling me that there's a little bit more involved than just that?
I don't buy into that BS at all. No way.
You are a rare breed, my friend. That's what you are. But I want to tie back a little bit to.
I mean, Clay, you're not going to buy my stock and sell my stock. You're not going to give me my entry point and exit point. I've got to figure that out on my own. And that's why I took several months off to say, okay, I got to figure out where I'm doing it, when I'm doing it, and why I'm doing it.
So I think that is how you would define serious, to kind of tie this whole little. So your buddies or whatever that have come by and you said, they just weren't serious enough. Is it fair to say that they just didn't want to do all the stuff that you've been doing? Is that an accurate kind of description of kind of why you say they just weren't that serious?
Absolutely. I've had a couple of them over at my house, and I would show them, literally a couple of hours. And I would be waiting for an email or a phone call or blah, blah, blah to come back and say, hey, let's do that again. And I never got it. And I'm talking childhood friends. They'd come over, we'd have a beer, and I'd show them for a couple hours what I do, how I do it, and why I do it. And they would seem interested at the time, but then after that, it just kind of fell off the shelf. They would even, I think a couple of them actually did the $99 chat, but then I don't see them on the chat. So it's kind of like they're not putting in the effort or the work or the time.
Yeah, and I think, and I'm not trying to throw your friends under the bus because I don't know them, but I think a lot of them, because you mentioned, well, some of them say, oh, that stuff's just gambling. I think it's more of, let's see, I really don't feel like getting as serious and as working as hard as what my friend Joe is, but I don't want to tell him that. I don't want to be like, I don't want to work hard. I don't want to do that. So I'll tell him that I think it's just gambling. So therefore, he doesn't think I'm lazy. And I think that's what a lot of people do. Whether or not your friends are doing that exactly, I'll be the first to admit I have no idea. But I think, Chez, you probably come across that quite a bit in the customer service realm of the site. Is people, their true motives they're trying to mask with something else. Is that a common occurrence for you, Chez?
People probably think I'm nuts when they say I'm thinking of getting inner circle. I don't know anything about trading at all, and I want buy and sell signals. And I go, you know what? You could get inner circle, and by all means, as a customer service person, I should try to make sure people are buying stuff all the time. However, I have absolutely no problem telling them, you're probably, if you have no background technical analysis and you're just not versed in anything at all with charts, you're really not going to get much benefit from it because we're not here to give you buy and sell signals. We are merely here as an eyeball army, and that's kind of what the real benefit of the inner circle is, besides just talking to the entire community. But yeah, I deal with people like that all the time. They want to put forth absolutely zero effort and get all the reward.
Yeah, so it's you're making some very good talking points here with that. But yeah, get serious. So that was a pretty big discussion on one word of getting and being serious. But it's so true. Too many people want to show up, think that this is a get rich overnight thing, and it's just not. So to kind of piggyback off that, I think you said you paper traded for, what did you say, like 3 to 6 months? Is that right?
Yeah, I didn't. I wanted to understand the options a little bit better because I really like trading options. But even though when I was paper trading, I wasn't paper trading. I was writing them down, my entries, and my exits because I don't like the delay on the platform of the paper trading, and it really wasn't helping me. And so I would have a notebook full of ask bids when I got in, when I got out, and I would tally up my total by the end of the day. And I did that for quite a while until I had an understanding.
So
I'm
this was
literally in tears over here. This is just blowing my mind.
Ches is literally crying over there. I can see the tears streaming down his face. So, but just to make sure, because I was like this conversation too. You went old school. You were just writing things down, right? There was none of these trade simulators or demos or anything like that. Is that right? You were just writing stuff down.
Yeah, no, I was writing pen and paper, literally just pen and paper, because I think sometimes I'm a keep it simple, stupid guy. Really, I'm a KISS method. And I think the more information you have, the more risk you actually have as well. And so I like to have, 1, 2, 3, stop, 1, 2, 3, stop, meaning keep it simple, stupid. If I start adding all this other crap, then I just cloud my judgment with more opportunities to screw up.
No, all this other
Information
crap.
overload.
Yeah,
Yep.
all this other crap. Define all this other crap because that's fast. I've never heard it. That's a great quote. The more you almost feel like the more information or the more steps, the more risk. Which I've nobody's ever said that. I've never really stopped to think about that. But you said all this other crap. Well,
Well, I
define that
can't
for our
handle.
listeners. What do you consider crap in your perspective of things?
Well, it's kind of like when you start looking at iron condors, butterflies, this, that, and the other on certain strategies. I'd like to stick with maybe one or two, maybe three, and then that's it. Until I master it, why try to get into another one? Because I haven't mastered the first one or two or three options that I was looking at. So why try to enter four and five? I mean, I've only been trading for a little over a year, maybe a year and a half, but really seriously trading. And I'm no expert. I've got a lot more work to do. I've got a lot more expertise to grasp. And so I just don't like to add more stuff to my book. I can juggle three things. You throw four or five things to me, I'm going to drop a ball. I don't like that.
Yeah, it's better be to a master of one versus a jack of all trades, especially in this, because there's no point in being average or mediocre at 10 strategies when you're going to probably break even at best, or you kind of find what really works for you and you hammer it and take as much money out as you can. Now, I want to piggyback a little bit to I know you're a sore you're not a sore loser, you just don't enjoy losing money, as most people don't. So I want to hear, how did your paper trading go during these 3 to 6 months? Because I know for a fact, actually I don't know for a fact at all, but I'm completely guessing, and you're a rare breed, so I could be completely wrong right now. How did it go taking losers on paper? How did that feel? What did it make you react a certain way? Anything like that?
Yeah, absolutely. Because I hated being wrong, and sometimes the chart would go against you. I remember I was in Amazon on a call, and it was last summer, and it reached its all-time high, and I didn't sell, and then it started dumping quick, quick, quick. And I'm like, oh my God, why is this dumping so quick? I mean, literally, and I found out, oh well, Carl Icahn just relinquished his position. Oh, really? you know, and he's buying the puts, and I was buying the calls, and so yeah, I think on that paper trade, I think I lost 800. Yeah, something like $850 in a matter of minutes. I mean, literally like 3, 4 minutes, it was just dumping. I didn't understand, but once again, I was angry at myself, and it's like, okay, I just didn't get out of the trade early enough. I got greedy because I think I was really up maybe $3,100,
Oh wow.
and then I ended up being negative almost $800.
But again, all of this, and I want to reiterate, all this on paper, which is why we just beat the paper horse over and over again, because at least you're figuring all this out on paper. So to you, well done. At least you're learning all these lessons about yourself on paper and not sitting here saying, and then I lost, $800 of, my actual real money. So for you listeners, this is why the dead horse gets beat over and over again, because it's so much easier to just take losses when they're not real, but you're still learning a lesson from them. And I like where Chez is going with this, because you're so competitive, because you're a sore loser, because you don't like to lose. Did you ever find that influencing your paper trading and maybe making your paper trading a bit unrealistic, or are you always pretty honest and pretty good with yourself in terms of, nope, that would have been a loss? Or, did you find that?
I was pretty straightforward, because I think that sometimes with technology and the mouse and the computer, I think you lose a little bit of emotion on it. When you write down a negative $800 figure and literally write the 8, the 0 down, I think there's a little bit more emotion on it. It's kind of like writing a checkbook to somebody. I'm writing a check to somebody, $800 here. Thank you. I just lost. Yeah, if you're sitting on a computer and you're doing paper trading and, oh yeah, I won $3,000, or oh hey, I lost $500. No, write it down. Write down what you lost. Write down what you win, because there's an emotional attachment to that. When you're actually writing a negative figure, it hurts. That's just me.
No, and I feel kind of bad, because I know I have a couple of YouTube videos out there where I offer a spreadsheet for people to download. I'm like, oh crap. Well, with a spreadsheet, you're just typing in those numbers. But yeah, the physical emotion of actually writing down in your own handwriting, I totally buy that. I'd be lying if I said I had thought about that before, but I have. See, Ches, this is why these podcasts are awesome, because I honestly have never thought about it like that, but I can't say I disagree with Joe in the least. There is psychology, that there's some pain that goes behind writing it down.
There's definitely some pain. It's, similar to, you could write a well thought out, letter to someone. When I say that, you could write out a well-written, very heartfelt email, or you could take the time to actually write it on paper, sign your name to it, fold it up and put it in the mailbox. It's definitely going to have more meaning. And I have no doubt at all that it has the same effect as, like you said, you pretty much, like, you wrote an $800 check and you had to sign your name to it. It's just not something enjoyable.
Yeah. So that's, I'm assuming that, did you do anything else, I guess? So you write down the negative $800. Now, is there like another column where you write down what you think you did wrong, or is it strictly pretty much just numbers when you were doing all this paper trading?
I was actually taking screenshots of the actual chart of where I screwed up. And so that way, because I'll go through, I'll replay, okay, I missed the entry there. Well, okay, that was stupid. Oh, I missed my exit. Oh, why? Why'd you miss your exit? Oh, well, there's why you missed your exit. So I kind of replay the trades throughout the day. I'll go back and say, okay, why did I miss that one? Or why didn't I get in? It's right in front of you, idiot. Why didn't you get in? And so I rewind the day. It's kind of like a coach who replays the game film. I do the same thing pretty much every day. I'll do the 5-minute chart, the 15-minute chart, and I'll see, where did I make the mistake, or, oh, you got it, you nailed it, good job. So you have to take the bad with the good.
Now, do you save these screenshots?
Yeah, actually, I was cleaning them up over the weekend because I had a bunch of them on there from the past 6 months. So,
okay,
yeah.
so I was curious, like, do you have like an archive of past trades where you go back but obviously not. If you said you're just cleaning them up, you don't like.
No.
You don't keep them.
No, because I don't like to. It's kind of like, once that deal is done, it's done. You have to move on.
Great. So I like that. So you learn as much from it as you can, but then after you learn as much from it, you just move on from it, because, like you said, once it's done, it's done. So
yeah, because there's going to be another day where you'll get another play, or that same setup might be there. So get to know it, feel comfortable with it, and then move on to the next one. Because if you let it linger, you can't let losses, or you can't let winners linger. You just can't. You just got to move on.
Why can't you let winners? Why can't you let winners? Crap. What was that word? Linger. There we go. Why can't you let winners linger? Why? That's an interesting statement. Why not?
Because there's another game tomorrow.
That's good stuff. There's something about JBH, which is, your alias in the room. I'm always like, man, this guy's prepared every morning. He's just like, I don't know. There's something now. It all makes so much more sense after talking with you. You definitely prepare, and it shows. So, but yeah, that's a good way to look at it. I remember that took me back to my high school football days. So Friday nights you would play. and then Saturday morning you would go in and watch the game film. And if you ever screwed up, you're always like, oh crap, here,
You know
my
it's
play's
coming.
coming, my play's coming, and the coaches are gonna read me. There it is. Okay, brace for impact, and then the coaches, so that's a great analogy. I can totally relate to that, and whether you've played sport, and I don't know, maybe that works like in the music, if you like have a piano recital, I don't know, do you go back and watch game film? I don't know on that, but as far as in the world of sports, I can totally relate to the Friday night game, Saturday morning, watch the film room and try to learn from it. But after that, it's not like you go back, 3 months later and all right, Clay, we're gonna watch that film again. No, like you said, once it's done, learn from it and then move on. So very well done in terms of just the analogies there. I think at least I can relate to them. I think that's a good way to put it. So you're paper trading. What finally happened that you're like, all right, Joe, you're ready to go live? I mean, when did that happen? And then, kind of what was going on that made you kind of feel like you could take that step into the world of real money?
Excuse me. I really started doing options on SPY. And the only reason why is because the bid ask was a penny or two between each other. And I felt comfortable with that. I wanted to get into a comfort zone. You look at Priceline, Netflix, Amazon, you might have a quarter to 35-cent spread between the two. I don't feel comfortable with that because you can lose really quickly. So I don't like losing. So I just started using SPY as my go-to for, I guess, probably the first 90 days. I was just trading SPY. Whether it was calls or puts or whatever, it didn't matter. I was just getting to know SPY. And that's all I would look at. And I just look at the 5, 15, and 30-minute time frames, and that was it. And so I just did nothing until I felt comfortable with that one. I wouldn't move on to another. I just wouldn't.
Now, speaking of comfort, is there any particular reason why you decided to kind of go straight into kind of trading options? Is it something you learned before you had kind of stumbled upon Clay, or did you just like the fact that it uses less capital? What kind of led you to, most people think of stocks and they're trading the underlying stock. What led you to kind of pick options?
At first I didn't like this 3-day hold. It was kind of like you're using your money and then, okay, you can't use it for another 72 hours. I'm like, what? I don't want to do that. And so, when options, you can go in there and you pretty much get them overnight. And then the percentages, when you're looking at trading 2, 3%, 4% winners versus maybe 200-300% winners, the percentages I liked a lot better.
And for our listeners out there, when Joe's talking about the 3-day hold, there is kind of a settlement period for stocks that is different from options. Options settle in 1 day, whereas stocks settle over 3. So that's what he's kind of talking about in that. And what that kind of means is that pretty much whatever money Joe has used on 1 day, he can use the next day, assuming he's closed out of his position. So it's much easier to kind of cycle in and out. In fact, we even have a video up that we'll link in the show notes about how we have many traders avoid pattern day trading rules using cash account and options. So you can find that in the show notes.
Yeah, so that good explanation there, and I think that's a very interesting and a very logical reason of why you'd want to go with the options route. So it sounds like you were getting quote unquote romantic with SPY, learning how it moves and all that. So how did those first few trades go? I mean, was there any fool's gold, or just walk us through those initial trades that you started to make on SPY?
No, I was keeping my investment short, meaning I was only trading. I think I trade maybe $300 to $400 max on a trade. That's it. Buying 1, 2, 3, maybe 4 option contracts at one time. I don't like to get overextended on anything like that. And that's pretty much, I've kept that pattern pretty much the same. You don't need to risk a lot of capital to make a little bit of money. You really don't. And, when I hear people buying 20 contracts, 30 contracts, I'm like, why? You don't need to. That to me gets to the gambling part. You're getting a little closer. That pendulum is swinging towards the gambling when you start risking that much more capital. So I like 3 or 4 contracts and usually right around the dollar. If you look around the dollar, that's me. This is my own personal. Anything close to $1, regardless if it's calls or puts. That's and it's simple math. 3 contracts, $300. Okay, that's easy. I can handle that. I don't have to pull out a calculator. It's just simple.
And I think that's an interesting point is I'm not sure exactly when it becomes crossing over into more of gambling, but I'm fully with you. Like I don't understand to me, it doesn't make sense. The rate at which the risk increase, when you get larger contract size, the rate at which reward happens, it doesn't really, I don't think it keeps up. I think it's disproportionate, which circles back to your point of kind of like why? You don't need to increase contract size in order to make money. I mean, if you just keep it somewhat small, you can still just stay consistent and make money from it. So I don't know if that makes sense to, what I'm saying, but it's just the RVR from a capital management perspective, it's just not quite adding up. Now if you have some multi-million-dollar account, well then yeah, you can easily do 50 contracts and that's no big deal. But for what Joe's point is, and I'm assuming most of you that are listening fall into that range of category, $300. That's not what you have to use, but that's more than enough to make money. And Ches, I want you to comment on this too, just because I know you aren't really trading options right now as we speak, but you have plenty of experience with it. I mean, you totally agree with that. $300, more than enough.
I made more money trading 3 contracts than I ever did trying to trade 5. And you know what? The only thing I really did at 5 was lose much more than I probably should have. And I am trading futures now specifically. And while I have the ability to trade, 30 plus contracts, I still to this day only trade 2. And I make more now than I did before because you can control your risk a lot better.
Yeah, and I think Ches, your dog, also agrees with us. So
I think he does.
Pongo agrees with you. So as Ches kicks him out of the room. All right, now I want to circle back to this whole loss thing because you definitely hate to lose. So walk us through those first couple losing trades. How did you do with them? I mean, were you freaking out? Were you mad at yourself, or did you actually take them kind of in stride? I'm very curious to hear, because there's always a difference between paper trading losses. Like, okay, it is still on paper, but what about a real money loss for you, knowing how competitive you are? So tell us about that.
I yell. I get loud. I get pissed off at myself. I'll be honest with you. It frustrates the heck out of me. And one of the biggest things was I was holding overnight, and I didn't like that. Oh, China problem. Oh, European problem. Oh, something else.
Greece, something like that.
Yeah, exactly. Greece. Ebola, whatever.
Zika virus, bird flu, you name it. There's always something they're going to find and move the market.
Yeah. Oh, Chipotle, their little thing, it's just.
Yep.
Oh yeah, there's a little Middle Eastern war about to break out again, and so I stopped holding overnight. I did. That was the okay. This is stupid. Why am I holding overnight? I don't need to. I was up nice, 100%, 150%. I got greedy. Oh, well, let's turn it into 300%. Okay, you're an idiot because you don't know what's going to happen in the world. So why do that? So I stopped. That was the big painful because on the options, the market is set pretty much right from the get-go, and so you might have it's a $1.75 contract, and then the bid starts coming in at 65 cents, and it's like, are you serious? I just lost 60-70% of my investment or my trade, and that was frustrating. So I no longer hold overnight, and so that took me a couple times to get a little.
Now, so you hold overnight, it opens up. Did you just automatically hop out, or were you kind of just holding and hoping? How did you deal with the loss when the market, or how did you deal with the trade, I should say, when the market actually opened?
Oh, like everybody. Oh, it's going to come back.
Okay. So I'm assuming if you had just sold right at the market open, you could have probably preserved a little bit more capital, because did you lose more than what you would have if you had just held or not held on and just sold?
I think I lost 85%.
Okay. Whereas what happened? How much would you have lost if you would have just sold right when it opened?
55.
Okay, so you cost yourself another 30% by holding and hoping. So, but okay, you were holding overnight. You thought, you know what? I'm taking losses. I'm getting irritated. I'm yelling, and it's just that's the problem. The solution is, well, don't hold overnight. So walk us through now a trade, and you're kind of let's talk right now, present day. When was one of your recent losses, and just how'd that go? I mean, did you deal with it okay? Did you let it just wreck your day, or just walk us through it?
No, I usually have a dollar amount value in my head that I'm gonna pretty much be okay with walking away with, or a percentage, however you want to look at it. And if it turns against me, I just sell, get out of it, move on to the next one. Back to being robotic, take your number, take your loss, move on to the next one. I'll get it back. And that's the way I look at it. You might go back 1 yard, but you might go ahead 2 yards. So it's back to that where I said, okay, just admit it. You're wrong. Move on. And so that took me a little bit of time. It did, just because you don't like losing and you think it's going to bounce back. Oh, it's just going to recover. Oh, it's going to hit the 50 SMA and bounce back up. Oh, the 20 EMA. Oh, and it doesn't happen. It doesn't go according to plan. So when I hit a certain percentage or a certain dollar amount, I walk away. That's it.
And you're not the first person to kind of use that strategy. And honestly, that's a good way to kind of keep anything extraordinary from happening. And, you've already done a great job in reducing your risk just by eliminating overnight exposure. But what were we going to say, Clay?
I was just going to comment. Literally at the day of this recording, and just so people know, I'm not just BSing this. So we'll put the link to the video of my live trade in the show notes. But I'd use the exact same thing that Joe's talking about today. I was like, you know what? For this trade, I'm willing to risk $100. And well, I guess it would have been $105 because given my share size. But that's what I did. I hopped in the trade and I was fine with losing $100. I mean, it still made sense within the context of $100. And I just went with it. And it turned out to be a winning trade, which was great and all that. But yeah, I used the same exact principle that Joe's talking about. I figured out a dollar amount that I'm totally fine with, that I felt comfortable with within the context of the trade, and I just went with it. So as long as the number makes sense within the plan, then I'm all for it. And yeah, like I said, I literally just used that today, so it's kind of funny you brought that up. But
that's the exit strategy. You have to have an exit strategy and not get too greedy with a loss or with a profit. Meaning that it'll bounce back. That 100, that I'm down now and it turns into 300, well, it'll come back to where I only lose 100. No, don't do that. You get out at your 100 or whatever that dollar or percentage amount that you already expected, get out of it. Don't think it's going to bounce back. Don't ever think like that. And that was my mistake in the beginning.
Okay, so your mistake was I'm okay with losing 100. And then all of a sudden you're down 300, but you're thinking at that point is, okay, as soon as it bounces back up to me losing just 100, you'll get out. Is that what you're saying?
That's what I was doing in the beginning.
But then of course, like you said, sometimes that doesn't happen. So,
it doesn't happen.
So that's just a great little example of those little voices in your mind that can trick you. Like, all right, Joe, yeah, you broke some rules, but it'll bounce up to at least being down 100. You're being good now because at least you're not greedy. Would be if you say, you know what, I want it back to at least break even. That would be greedy, Joe. But since you're saying, Joe, that it's only $100, since you're still willing to lose money, Joe, it's fine. It'll bounce back there. And then all of a sudden, before you know it, well, crap, now you're down 600. And all right, Joe, and people, if you never traded, you think I'm crazy right now because I'm trying to mimic voices in Joe's head. But that's how it works. That's just the psychology of trading. It's amazing how your mind can try to rationalize stupid decisions. So, but good on you, Joe, for recognizing and now correcting those sorts of games that those voices were playing with you, because a lot of people never do, and it
takes a little bit. It does.
It does.
Yeah,
there's no real shortcuts for sure.
So tips or tricks. That's a good point. So did you do something that made it a little bit easier? Or no?
Just learning to admit when you're wrong. That was the hardest part. The emotion of admitting you're wrong. I still have a hard time saying I was wrong or I'm sorry. And it takes time to break through that barrier. And finally, when you start losing more money, you better learn or you'll be out of this game quick.
And quick is maybe not even a good enough word for it, because and that's so weird. Like, I think unless you can admit you're wrong, you're going to be gone in a
it's just not a natural thing to do. Everything you're taught in life is never say no, never give up, blah blah blah. You have to do this well, and then you get better, and it's okay. No problem. And this is the only job I've ever experienced where you are going to be wrong. It's guaranteed. And I'm sure that people do things wrong in every other walks of life. But if you're wrong and are stubborn and just don't change your view and recognize it fast, you could completely end your trading capital. You could end your account, end that business right there, and it could happen in one trade. That's the crazy thing. So yeah, it's just completely unique to this job specifically too, and it's amazing what those voices will do.
Go ahead, Joe. No.
I treat it as a job, and sometimes, you know, I treat that three, four, $500 as my last three, four, $500. And you'll trade more cautious if you treat it as if that's the last money you have in your pocket. You won't enter that risky trade. You'll wait till you got 100% green light to make a move on that trade. And so if you treat that as if your last three, four, $500 on every single trade, you'll become a better trader.
That's Ches, come give me a hug right now.
We need to
great
get a group
advice.
hug going with Joe here because it's
Yeah,
just talking about being selective and how rare that is, and how many people, including myself and you and everybody, who sometimes get bored and force a trade. You know, it's definitely more prevalent in the beginning, but just you literally, I mean, I'm speechless.
yeah. I mean, this is the thing that people, oh, you don't give anything away for free. What Joe just said, the little tip he just gave, is just I I don't even know how to put words to it. It's so fantastic. If people would just treat their accounts like this is the last $300, this is the last $500, this is the last X amount of money that I have, the psychology that's going to help you just in surround yourself with. Because you're right, Joe's right. You're not going to take that extra risky trade. You're not going to get sloppy, and that's why I like the many people in the chat room have done kind of they try to grow $500, and I think RD Trader made the point was when he did it. It's a good way to keep you totally focused because all you have is $500, and after that, it's done. It's gone. And when you treat it like that, and like you said, for Joe, he's not even not the $500 challenge, but just looking at the trade as this is my final $300. If that's not a great bit of advice, then I don't know. Turn off the podcast right now if you don't think that's a good bit of advice, because now if you're new, you probably don't know how good of a bit of advice that is. But seriously, try it. When you get into trading, just treat everything like this is the last bit of money, because for me at least, and I want to hear from both of you, when I'm not treating things like it's my last $300 or whatever, I can find myself getting sloppy. I can find myself trying to get too fancy. I can find myself thinking I know better than the market, and then I start to dilly dally and wiggle and bob and weave, and I think I'm some sort of God's gift to trading, and then before I know it, I have a big red number in front of me. So I mean, can you relate to that, Ches? I mean, in terms of not treating the money like it's your last, and all of a sudden you just start to get sloppy.
I had that earlier this week, and it's just like you said, you just start to bob and weave, and here I am. I'm a trend trader, and I do great trend trading, and here I am trying to take a counter trend trade, like, oh, I know this skill, or I'm going to trade the bottom of this box, the top of this box, and what do? I'm just digging myself this big red hole. And there was no reason for it. It's just like you said, it's like a brain fart for some reason. Like you said, you're God's gift to trading. And I just did that earlier this month, and you just nailed it. And like he said, if you're new to trading, you probably think we're nuts and talking just complete nonsense. But I assure you, your brain will try to do this to you. And being able to recognize it and being selective, like Joe said, like this is the last trade. With the last money you have in your pocket, you'll avoid doing stupid things like that, like I've done and Clay's done in the past.
Yeah, and that's like I said, just to reiterate and to kind of wrap this up, if you're thinking, well, how do I become selective in my trading? Joe just answered that. Pretend like you only have $300 left, and you'll become very selective. But you have to be genuine in pretending like you only have $300 or $500 left, and that's how you become extra selective. So we could talk about that. Joe, did you ever think you're going to open up a can of worms like that when you just made you're just making a statement in passing, and here Ches and I are weeping, and
it's real.
It is real. Exactly.
I can afford to lose $300. I don't like to lose $300. I don't like to lose $100. But if you change your psychology behind that and say, hey, I got to put food on the table, or hey, I got to pay that electric bill, my cell phone bill, that cable bill, whatever bill it is, and that's the only money you have, then you better start really thinking about the execution of your trade plan, or you're really going to end up with negative dollars.
No, that's well said, sir. Well said. So where are you at right now? What are some of your strategies or indicators? Just kind of talk us like what you're looking for, and walk us through what's on your chart too. I mean, what indicators and stuff like that do you have on your actual charts?
That's funny you say that, because it took me a little bit to figure out what type of chart setup I like. And what I mean by that is the actual layout of my chart. I'm kind of particular on certain things, my house, my car, my whatever. So the chart took me a while to figure things out. As far as my chart, I use the 20 EMA as a lot. I like my 20 EMA. I use the 50 and the 200. That's the only moving averages I use. And then I have two resistance points and two um, I'm sorry.
Support points.
Support points on my
Yep.
chart. That's it. I mean, literally, that's it. Besides a trend line, I always have a trend line on every chart, because you don't want to fight the trend. So I have a trend line on everything, and that's it. I don't use the MACD as I used to because the volume and the price action kind of tells me what it's doing, so I don't need it too much. Once again, it becomes one of those keep it simple, stupid guys. I have my Bollinger Bands on there, and that's it. I'm done. No more. I don't need any more because more information you have, it's kind of like I don't even know what they call it, the cloud. Someone uses a cloud, or like that Pink Floyd thing that you pulled out one
Yeah,
time.
I don't know what that thinking. I think it is literally just supposed to be for a laser light show for your webinar audience. I think that's why that tool exists because I have no idea what that thing is. Ches, do you know what that is?
The Fibonacci spirals, I didn't know. I have no idea. It's something based on Fibonacci numbers, which I have nothing against at all, but I don't understand how you would use it in stock analysis. But yeah, there's just some crazy tools out there. And honestly, reducing it seems to be a trend though. As a new trader, you'll toss on everything because you're looking for the holy grail, the whatever clicks and syncs with this and blah blah blah. And just like you said, Joe, I've reduced my stuff. There's no more than 3 things on my chart, and that's all I need. And in fact, one of them is just there to confirm my idea. I don't even trade off of it. It's just there. And like you said, price action and volume, that's king. That's that's what's moving.
Well, you can use a car to get from A to B. I don't need a Mercedes or a Rolls Royce on my screens. I can get to A to B and still get there, and I can make money.
Joe, I love you. That's a great analogy. As a fan of analogies, just Joe, come give me a hug, man. This is fantastic. Ches, that was a great analogy, wasn't it? I mean, I am.
That was a fantastic analogy, and you're the analogy guy too.
Out. Yeah, I mean, I love. Oh my, Joe, man, I'm putting you right up there in the ranks of Doc. Doc is very strong in the analogy department too, but I
have a truck. I'm 40. I'll be 46 in a couple months. Oh, next month I'll be 46. I've had 2 cars all my life. 2. And the one I have right now has 259,000 miles on it. I keep it real and I keep it simple.
But you clearly got into trading so you can get that Lamborghini though, right?
No, man, it's more about going back on that 30-day road trip.
Amen to that.
Yeah, so that's a great analogy. I think that's like a mic drop moment. Enough said right there. So we now know what your kind of strategies, what your charts look like. Walk us through a routine. You kind of did touch on this a little bit, but what does your day look like? Just walk us through from kind of when you wake up to when you go to bed.
Well, I'll start when I go to bed because I look at the futures and I kind of go to bed with an idea of what the day is going to be like. I'll check out the futures, see what the European world's doing, see what the Asian market's doing. You see what the oil's doing because right now pretty much SPY's trading off of oil. Go to bed, wake up early in the morning, and I pull up my news feeds, CNBC, Bloomberg, find out what's going on there. My charts are already set up from the previous day because I've already set my supports and resistances up, moved my trend lines. Oh, that's another thing. On my charts, the pivot points, I have them color coded for the 20, 50, and the 200 daily on my 5-minute charts. So I always know where they are on that chart on a 5-minute chart. I don't go back to the daily chart. It's there. There's a green line going across the board, and that's the 200 moving average. And so I know when it's getting close to it. So that's helped me out quite a bit. And then, I'm starting to look for volume, see what's going on. I started using the Thinkorswim platform, and they have a sizzle index. So I start seeing what kind of movement's going on with that. And that's pretty much it. I mean, like I said, you start getting, too much information on there, it clouds the judgment. It's kind of like, oh, well, that's moving. Oh, well, that's moving too. Oh, well, you're not sticking to a decision. So really, one of the biggest mistakes I made a long time ago, I was watching so many stocks that I wouldn't make a decision on which way to go. So I narrowed it down to really 4 charts. That's SPY, that's oil, because I need to know what the oil chart is doing. And then a couple other ones that are moving in the morning. Like today I was watching Win. Win was moving up pretty well. But that's really about it. If you start doing, once again, you start adding 4 or 5 balls to your juggling system, it gets more difficult.
And that ties into, kind of keeping it selective, not even in just your indicators and stuff like that, but how you're finding plays. So honestly, that's really awesome to hear. But a question that takes a little bit of looking inside for to kind of answer is, what would you say are your particular strengths at this moment, and then what are some things you need to work on as far as weaknesses?
Strength. That's a tough one.
No, it's not. Come on, man. I got like 15 of them right now I could list off.
No, because I criticize myself quite a bit.
Yes. And
So
that
so
in and of itself is a strength right there.
yeah, I mean, I admitting right now my biggest thing is admitting when I'm wrong on the chart and it's a loss. I've been getting better and better at that. So that's actually was a weakness and now it's becoming a strength.
Good. Excellent.
Um, a weakness of mine. There's urges to put more capital in and bet more. There is. It's kind of like, man, I took that 300, I made 900. Well, why don't you do 900 and turn it into 2,700?
Oh man, that's a tricky voice. I'm glad good job to recognize that.
So that's that's that little devil on the left side of your shoulder, and you got the angel on the right side of the shoulder, and don't screw up what's been good because you've been good keeping it small wins working out better. So that's those are the challenges that I have currently, and I think I'll always have those challenges. I mean, it's just the day of a trader. I mean, that's just the way it works. You're going to have that. Oh, you idiot! But I will say this: I've gotten better at. There's some days I walk away. I don't like anything. I turn it off. I walk away. It's done, and I'll follow along, and I'll be in the chat and maybe make an alert. But I'm not trading. I don't like the setup. It doesn't suit me. It might suit somebody else. Good for them.
Exactly.
But if it doesn't suit me, then I'm over it. The other here's a weakness. I still have a hard time with gap ups and gap downs. I need a little bit for things to settle before I make my move because there's been times where, okay, it's going up, and I enter, and then bam, it just goes down and down and down and down. And that's a weakness that I still have to work on. The gap ups, the gap downs, So I kind of wait first 15, 20 minutes and let things settle down.
Well, you've offered a lot in terms of weaknesses, but you've also offered a lot of solutions. So, what's the saying? Don't bring me a problem unless you have a solution. Well, you brought a lot of problems, but each of those have come along with a good solution. Yeah, I mean, gap ups, they can be very tricky, but a good solution is, hey, why not let things just settle down a little bit? So, and the other thing that is I think that you always have these weaknesses, and absolutely, the voices as a trader never leave you. But what keeps you in the game as a trader is A, you recognize the voices, and B, you know how to handle the voices. And going back to what Ches and I've been saying, that probably sounds very lunatical, and I realize I made up that word.
Because you are a lunatic.
Because I am a lunatic, there we go. But put some money on the line, and then you're going to understand. You're going to see, oh, wow, these guys, there are voices in my head that I didn't know existed. So, because that was so perfect. I just turned 300 into 900. So your voice is going to go to, well, yeah, man, let's turn 900 into 2,700 now. So, how about you just turn 300 into 900 again? And there you go. Just, if it ain't broke, don't fix it. So, but that's awesome that you recognize that voice because that's a perfect example of how that greed voice actually operates. So, well done there. Well, we got to start to wrap things up here. I don't know where the time went, but actually, I know where the time went. My adrenaline's just been flowing, and time flies when your adrenaline's flowing. So, but Ches does have a time machine, and I'm very curious, Ches. I don't know about you, because he got things off to like.
I don't even know what to expect here because this is going to be like another mic drop bomb going off. I don't know what to expect.
But I mean, most people, we kind of know where they're going to like, oh, well, I wish I would have gotten educated first. Like, that's because they started out as a train wreck. But Joe actually took the businessman path. But Joe, if I gave you Chez's time machine and you could go back to the start, what is one bit of advice that you would give yourself?
Oh, man, slow things down.
Really? Because you said you paper traded for, you said 3 to 6 months. How long did you actually paper trade for? Because that's kind of a big range.
Literally, I would paper trade almost. I mean, 5, 6 months was pretty much there. I didn't need to do it for a living, so I had the benefit of doing that. So. No, literally, I wanted to understand it more. I hate going into something you don't understand.
I find that fascinating, though. You paper traded for literally, like you said, we'll just call it 5 months. But even 5 months, some people are thinking, are you crazy? 5 months? I want to put my cash in the game. But you're saying even after 5 months, you wish you would have slowed down, which I don't disagree with at all. We've had other guys.
It's a marathon. It's a marathon. It's a marathon. If you want to live a little bit longer, slow down. So I don't mind trotting. Trotting's fine. I can make money trotting. The people who like to run around Carl Lewis around there and 100-yard dash in 6.9 seconds, good for them. I'm gonna win. It's that tortoise and hare. I'm gonna be there. I'll be there tomorrow. I'll be there next year. What have you? But if you slow down and treat it as a marathon, you'll enjoy it more and you'll sleep easier.
Gold, just gold. Like I said, mic drop.
Mike dropped it.
And
Mike
the
dropped it,
podcast. Podcast over. See you guys next week. But Joe, obviously it's been an absolute pleasure speaking with you, and you've dropped a ton of great information and knowledge. And we know for a fact that there's going to be a ton of new traders out there, just people who are trading in general that'll get some value from it. So thank you first off. But this is what's really going to determine the
now
success
the real
of your
interview
podcast
starts.
right here.
Yeah. Now the real interview starts.
Clay needs to know your favorite movie, and that'll determine if you get to stay in the community or not.
It depends. You got those movies that are always on cable on Sundays that repeat every week.
I know what you're. Yep.
Shawshank Redemption.
Oh, that's classic, man.
Yeah, I like Shawshank. I can watch that all the time. I'll get into Godfather. I like the classics. Don't get me wrong. I like my sci-fi as well. But yeah, I can sit there and I can watch the Shawshank or the Godfather. Those are my two I can go back to.
I don't think as a movie fan, I don't think any true movie fan is going to find much disagreement there. What about food down in Texas? What do you? I'm guessing some sort of barbecue, but I don't want to speak for you. So, what's your favorite meal and dessert?
Tenderloin and creme brulee. You give me a good steak any day. I don't get me wrong. We love our barbecue down here, but if you give me a tenderloin, filet, I'm a happy camper.
Very good, very good. Now, obviously, you've already done some traveling, and you do look forward to doing kind of more in the future as well. So, I guess what's probably one of the most exotic places you're looking forward to visiting at some point?
I really want to head down to Australia, New Zealand area. I want to check out the Great Barrier Reef. Yeah, there's my 50th will be up in a few years, and my girlfriend wants me to go in a cage shark diving. So that would be a cool little trip. So that would be
Clay wants to join you. He loves sharks and being in tight confined spaces.
I'm gonna have to respectfully disagree with you, thinking that sounds like a fun little being in a cage surrounded by sharks does not sound very fun to me. But hey, more power to you.
Yeah, no, they fascinate me, man. It's something that you really have no control over. I mean,
exactly.
That's the thrilling part.
But no,
Australia and New Zealand would be my destination to go to.
That's awesome. Well, we'll wrap it up with our final question here. I was going to say that our famous final question, but I don't know. Famous, that might be a little kind of, I don't know,
quit tooting your
stuck
own
up.
horn
Yeah. I don't think it's famous. So I'll just say our final question. But 3 words, what 3 words would you use and say it needs to be associated with a successful trader?
Patience would be the first one I would use. The second word I would use, diligence. You have to. And then the third one I would use is humility. You're not always right, and you better be a good loser. Even though I am a horrible loser, you have to show a little bit of humility. You have to show a little bit of patience. All those things. Trading is a great way to make money, but you can also lose a lot.
And that's well said. And I'm going to add in one more word for you that I would use, and I guess you could put in the diligence word category, but I would say organization for you, because that's one thing. Like I said, there's always been something about you just observing in the chat room. I'm like, JBH, man, he just seems like he's got it. But now you are very organized. I can tell you've started businesses before because you seem to have, like you said, your routines, and you have all sorts of things inroad. And I'm not saying you have to be like a neat freak type organizer to be successful as a trader, but there does have to be a sense of organization, routine, and just, I guess just routineness that goes with it every single day. And, that's, I think, another word I would use. And one of your strengths, too, where if you were going to struggle, I was going to say, hey, man, you definitely have an organizational strength. I can tell you're running this as a business itself. So, well done to you there. So before I get too mushy gushy on you, thank you very much again for hanging out with us. I know Ches, and I'm going to speak for you, Ches, but we vastly appreciate it. This was a great interview.
Thank you very much, guys, for having me on. I mean, I've been on, CT for a couple of years, and I know I'm not the most talkative in the chat rooms, what have you, because I got things to do or whatever.
Hey, man, now I understand. That's like, and you're a cool guy too. So I'm like, why isn't he more social? But now it's like, okay, well, he's got a system. So, hey, man, if it ain't broke, don't fix it. Nobody's taking any offense. Well, I used to be very offended that you wouldn't hang out with us more, but now I understand, man. It's all, no, I'm kidding. But yeah, definitely, keep at it. This was fantastic. So thank you again. And for you listeners out there, if you enjoyed this, which I'm pretty confident you did, then would like to make a few requests. If you're listening to this on the website, click that share button, leave us a comment below. We read those, and clicks of the mouse go a long way. If you're listening to this on iTunes or any of the other podcast listening places, then go ahead and please leave us a ranking, a comment, however you can do it. Little things like that, like I said, do go a long way, and it's just a little couple clicks of your mouse. So we really do appreciate those sorts of things. So again, thank you to Joe, and we will see everybody back next week's episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the ClayTrader community, including the trading team, premium training, and more, visit ClayTrader.com.